when we exit the trades, we always know what we did wrong. But when the trade is actually occurring in the moment, we just lose ourselves. I don't know how many times everyone's done it as a trader where you exit a position, you go, why did I do that? That didn't make any sense. So that's why I think having a written trading plan that you can go to and a checklist that says, I am looking for this occur. And when I go through that checklist, if I can check all the boxes, then I hit the button. I think that really, really helps, because when you're in periods of drawdown, like I just was, I can take that break and I can go back and I can say, my plan works. I'm just, going through a rough period right now. Make those adjustments, lower your trading size, and go from there. But the trading I did was the exact same. It was the exact same process. It was the exact same plan. It was just, again, staying alive until you get that moment where you hit it and you go from there.
So hi everyone, thank you very much for Michael, one of our funded traders, trading 2 funded high stakes accounts, for joining us today so we can pick his brain and talk about some of his success, some of his failures, and how he has got to the place that he has now. So Michael, thank you very much for jumping on. How's everything going?
Things are going well. We have a new baby in the house, so that's kind of tiring, but so if I slur my words or misspeak, that's on a little bit sleepy. You'll see me probably go after my iced coffee a little bit here, but everyone's happy and healthy.
Your first child?
Second.
Okay, so you're a pro, you're a veteran already.
Yeah, I knew to stock up on caffeine and Red Bull and all that stuff before I got started.
Yeah, fantastic. So give me a little bit of a breakdown of who you are, what got you into trading, and we'll take it from there.
Sure. So, again, you can see gray in the beard, so I'll try to keep the long story shorter. But I actually started day trading equities in a prop firm, a different type of prop firm, way back in 2006. And started because there was a job fair at my university, and they asked questions that had nothing to do with finance at the time. It was, do you play video games, and which ones, and all of this. And because back before then, it was in 2006, there wasn't a whole lot of computerization of the market. So we ended up doing a lot of, I would call them games around market makers and specialists and things like that in the US equity markets. And I did that for a number of years. That firm ended up shutting down because as the market got more computerized, a lot of these games stopped working, and the scalping, not randomly, but scalping around specialists just didn't work out too well. So then I moved over and I started to work in the hedge fund space for a few years, where I worked doing kind of risk management for a bunch of different hedge funds, and kind of helping the hedge fund investors realize which funds would make sense to them. This was all around the Bernie Madoff time, for anyone who's watching and remembers that story. So they wanted a third-party company to go in and make sure what they were doing was legitimate, and it was above board, and they were actually trading, and they were actually generating profits from their trades. So that's a lot of what I did, which was great because it exposed me to a whole wide variety of different hedge funds and how they trade it and what they were doing. And then when that company got bought out, I started to work with a company called Trade Ideas. I actually got my CMT, which is a chartered market technician. And ever since then, I've been consulting with them and then trading my own funds. So I've been doing this for a long time. I've just stumbled into this and the Forex prop firm world actually just recently, over the last, I don't know, maybe 6 months to a year.
Interesting, because we do have a sister company that deal with mostly US equity. So it's interesting how you would decide to come over here and do some trading in Forex. What was that decision, and how come you've made that transition to start going into Forex trading?
Well, actually, I speak with Michael frequently. Actually, Trade Ideas and Trade the Pool have a relationship. So that's actually how I got started. Thinking about this is I am not a good day trader, and we'll go through some of my failures and struggles to get funded here. And currently, I know that the purpose of Trade the Pool is a little bit more on the day trading and intraday trading style with some swing aspects, and maybe that's going to change down the road. But it's just more of a personality thing. I want to hold trades for a number of days. I find
Yeah.
the shorter the time frame that gets for me anyway, the more emotional I get and everything. So I'm always looking for ways that I can hold for many hours to days on trade. So I did that, and then it comes to strategy diversification. So I trade equities myself with my own capital, and I swing
Mhm.
trade those, and I've been doing that for many years. But as you know, there's sometimes that the equity market's really interesting, and there's sometimes that nothing's happening, and sometimes metals, and you guys have crypto now, and all of that. So I always like to have access to as many different instruments as possible, because then it stops me from over trading something that's just not moving. I can go somewhere else and explore that when it's moving.
Interesting. Where have you got or built up your methodology around your trading, your techniques, and for better word, your playbook? How did you first develop that? And is it very different from when you started to what it is today? Or do you want to talk about that?
Yeah, it's very different from when I started. As I mentioned, the original trading style I had in 2006 just can't even work anymore, right? You were
Mm,
you were literally we were the HFT traders before there was HFT traders. There's a bunch of college age adults that would play StarCraft and then come and play in the market. So that's completely gone. As I mentioned, I took my CMT, so I'm a chartered market technician. So that's a 3-year designation on just technical analysis and quantitative analysis. It's for those who don't know, it's like the CFA, but instead of
yeah,
looking at the fundamental side, you're looking at the technical side. So that did a lot for having me explore different technical aspects of trading. So that did a lot of it, and then it came down to, like most things, reading books and listening to other traders and talking with other traders. I'm thankful enough that I do a lot of this speaking with traders, so I can talk to people that I respect and bounce ideas off them. So a lot of the problems, which again we'll go over, for me was adapting what I do in the equity space where markets trend way more,
yeah,
and then taking that and then going into the forex space as well. So like anything, it was trial and error. It was a lot of failures. It was a lot of, getting beat up and getting mad about it, but then reporting your trades and tweaking what works till eventually you find something that works for your mentality and then also in the market that you're trading.
100%. I think going off what you just said, like I used to enjoy trading crypto, and crypto moves a little bit like equities. Whereas when
Hmm.
you come into the forex market, when things start to range and you've got a direction and you're expecting the direction, but you get chopped around quite a lot, it can be quite difficult if this is to adapt from a way of trading to now adapt to more of a range or intraday types of trading as well. So it's
Exactly.
super. There's a lot of nuances as well with those types of changing and different types of techniques on different assets. So that's interesting to hear. Let's go into your accounts because this is what people want to hear. They want to obviously understand a little bit about what you've been able to achieve, and then you can tell us just a little bit about what it took to get here because it wasn't all smooth riding,
Nope.
to be honest. You went through a couple of accounts where it was a little bit difficult just finding your feet, but let's
Yep.
pull this up.
Yeah, and I think that's important to show people, right? Is to say, hey, it wasn't all sunshine and puppies until I kind of got my feet under me.
Yeah. So you can see here we've got the the 100K funded high stakes account. So you've actually got a high stakes account that's 150K, which is been multiplied through hitting the milestones, and also the
Hmm.
125K as well. So this was the first funded account which you passed to then get the extra funds added. So just a couple of these, just looking very briefly onto some of these accounts, and you're just looking at just the best profit compared to the biggest loss is kind of shows to me already that you're quick to cut a loss and you just let
Yep.
your trade kind of breathe and play out, which is very different from somebody that is newer to trading, where they're quite scared to hold off onto their profits and they cut them early. And the opposite when
Hmm.
they're losing, when they're actually losing, they tend to leave their trades just a little bit of extra time. So points out straight away to me. Also, a win rate of 60% with that kind of risk to reward ratio is incredible, to be honest. That's really good.
As lucky, I would say. When we
Lucky.
get to the other accounts,
Yeah.
it's like anything. At some point, you're going to hit your stride. But no, I would say if there's something I do focus on, it is is when I have a winner. I put a stop at break even, and I really try to go for the guts, knowing that every now and then, and when we get to my current account, with the 150K account, I think there'll be a good lesson there.
Yeah.
Is the my job, the way I look at it, is to stay alive until I get lucky and hit one that really, that really makes the difference, right? So even on that P&L graph, you can see just a couple great winners, and the rest is kind of, treading water until that occurs.
That's the point, isn't it? You're trying to, like you just said, surviving until you say you get the luck. Obviously, it's a little bit of luck, but it's also that experience that you've probably developed to know when you can be a little bit more luckier than usual, when you can try
Yes.
your
Yeah,
luck a little bit more, which is
exactly.
super, super important. So this is a 125K account, more trades on this account. So you obviously you had it a little bit longer. Again,
Hmm.
you've still got your best profit, much higher than your biggest loss, still quite a high win rate. You've probably got a range where your strategy is probably, you know, it's worse, maybe around about 45%, 50% to
Yeah.
what's your higher range of your win rate on this particular strategy that you use?
I would say if I can get 60%, I'm going to be the happiest guy in the world. I'm going for 50-50, and
Yeah,
then again trying to hold those winners.
yeah,
And we'll get a little bit more into the details, I'm sure, but some of that is scalping around a core position or a core idea that I
yeah.
develop. So some of those win rates can be inflated a little bit just because I'm trying to just scalp around to make up for some of those losses. That's why you see
Mhm.
a lot of flat-ish periods in the
Yeah.
equity curve followed by a couple bumps. So I would say it's between 40 and again, if I can get to 60 and maintain 60 for any length of time, I'm very, very happy there.
But even those flattish periods, it's a couple of days. It's really just it's a
Yeah.
couple of days maybe that you're not actually losing much money at all. You're not going into massive drawdowns, maybe a percent here and a percent there, but it's nothing too big. But would you call yourself an intraday trader, or would you call yourself as more of a swing trader?
I would say it's more of a swing trader. I bet you if you took out the scalping around a core position that I do,
Yeah.
that whole time would be much longer. But
Okay.
so for example, if I'm bearish USD franc, which
Yeah.
I'm in a trade right now, and I've been bearish on that, I may have half of a position that I'm holding for a period of time and then scalping in and out of the other half to try to generate income or offset losses on something like that. So I bet you that shrinks that number a little bit artificially.
So when you've got a swing position, you would happily, if you're, let's say, short something, you'd happily get long on lower time frames just to make some money up while you're waiting for that position to work out. Is that what you're saying?
More of if I'm trying to short and I'm okay risking a 0.5% of my account on a trade, I will split that into two.
Yeah.
And one I will short and then cover, and then if it bounces, I'll short and I'll cover,
Mm.
holding that other position for, again, potentially, if I'm right on the direction, a longer term move, and using that scalp around to try to offset some of the losses for when I'm wrong on a thesis on a position, right? To
Yeah.
try to smooth out those returns a little bit. I
Nice.
will move stops break even relatively quickly,
Yeah.
because what I'm trying to do, and I use, and I can show you this, but I use commitment of trader data and I use sentiment data to try to gauge an overall direction. So then for me, it's about, and we talk about taking small losses all the time, is that I need to stay alive. And this is the chart that I think is going to give a perfect example of that. I need to stay alive until I'm correct on it. So
Mhm.
for this period of time, you can see a whole lot of chop with a drawdown that's worse.
Yeah.
I'm I was uncomfortable with that, and I'm
Yeah.
actually making a change going forward where I'm cutting my position size again, because that was too much for me. And that was a lot of, you'll see, betting long the yen or betting short USD JPY. And the idea was exactly what happened on that big spike, which ended
Yeah.
up being a very good trade. But the amount of drawdown I had to take to get into or to hold that position was just way too much for me. So that's what I'm trying to do. So at the end of the day, that was roughly a $10,000 profit on a short yen trade. But you can see there's a lot of chop and a lot of mess for me to get to that position. So that's what I'm working on with my trading is that I want those drawdowns to be less while I figure out this position. So that's what that other scalp around position is meant to do.
Hmm.
In this case, again, I just got a little bit too big. It was when that yen did that crazy move overnight.
Yeah.
I got caught out a little bit on that.
How many times would you give yourself to lose on an overall trade idea before you say, okay, I'm not, this is invalidated. I'm not going to get into this trade again.
I would say during a day, maybe
Okay.
twice max, but I will then go back to that at some point because again, I'm using commitment of traders data, which shows us the positioning of speculators and large and small speculators. So you know where the boat is a little bit too loaded. And everybody on Earth was short the yen or long USD JPY. Like it's
Yeah.
you go the community data just shows that everybody is in that trade. So at some point, I am very, very confident that the move that just happened overnight will happen, and that will then be a profitable move. The um, idea is that I have to then time these entries, and then when I get hit, take a break and move on. But knowing that I'll come back to that, it just might be in a couple days once more data has occurred.
Yeah. When it comes to taking a hit, how do you deal with taking a hit? Because I know one of the biggest things with a lot of traders is a lot of overconfidence, except for when they're making a lot of money. And if you had, passing up to these levels, 60% win rate, you were probably
Hmm.
ecstatic. You were probably feeling absolutely fantastic. And then once things start to get a little bit more difficult, and you can see here the win rate has gone down by half,
Yeah.
it can start making you feel a different type of way. So I just want to understand from you, how do you control your emotions when you're in a different type of mindset? And yeah, how do you get through that period?
Yeah, I walk away, right? I live in the middle of the woods, so I
Yeah.
go out in the woods. So that during before that really good trade that brought the accounts back into profit and a fairly good profit on them. When that drawdown, I was down around I think 5% at that point, and that was too much for me. It's 10% until the account is gone. I do something where I actually will scale my risk based off the stop loss level. So as opposed to a lot of people to say I'm going to risk 1% a trade, I look at it as I want 10 trades in a row before the account is lost, and then
Yeah.
I will adjust that. So as you get closer to that level, I'll risk less and less. So
Yeah.
in that scenario, I completely cleared the deck. So I sold everything. I took a day off. I walked around the woods. I rethought of my positions. I said, okay, I got to come back. I'm just going to trade a little bit smaller and reduce my risk a little bit. And then just lucky enough and crazy enough, the very next trade was the one that, wiped out all of those losses and then created that gain. But you're right. If I had stayed in that mode of beating my head against the wall, then that could have very easily crashed that account. So I think
Yeah.
um, taking that time, which is one thing that I love about prop firms and why I talk about how I always traded with prop firms, is that kind of forced risk management. Some people hate at the time, but at the long run can really save you because there was a point there where that daily 5% loss, I was fairly close to that. So it
Yeah.
forced me to say, okay, I gotta shut everything down, and I just took an extra day off and rethought about things, and I just came back a little bit smaller, but was just lucky that with what happened with the end happened the way it did.
So that's on that one side. Now, how do you react emotionally to a trade that you've just got that luck? That $10,000
Hmm.
That's also something that you've got to think about. Did you take a day off or take some time just to look at that and think, what am I going to do now? I've just made all of my profits and some back.
It's the same mentality. I think you have to reset your baseline to zero. I would argue, and again, this comes from the gray and the beer and the experience, and I'm
Lots
sure
of
you've seen
trading.
it talking to a lot of traders, is that quite often your biggest loss comes right after your biggest gain, and it does because you get a little bit of this. I figured it out. I'm immortal. I've hacked the market, and I think a lot of this just with me comes from experience of knowing that I'm in this heightened sense of I think I'm the greatest in the world. So I did pare down. I've got a couple positions open still, but I actually took another yen position after that, but with 1.5 lots instead of four, right? So I
Yeah.
shrink everything down. I go, okay. Trading is very much, I think, knowing yourself. So until I'm back to baseline and I understand I'm not immortal, right? I just have a strategy that sometimes, like now, it's working really well, and there'll be periods that it won't. And once I'm kind of back to that mentally, I think it will be time to, maybe take another couple shots a little bit bigger. But yeah,
Yeah.
I think it's always just get away, return yourself back to a baseline mental state and then come back.
Yeah. 100%. So you're floating now in some nice profits. I did have a look at your accounts before. Do you mind just opening up maybe Trading View and just showing us what made you get into some of those positions, kind of what you were thinking, what you were looking at, and see if we can extract a little bit of knowledge out of you before I let you go.
Sure. So I use three major tools is what I decided on. And again, as you mentioned, I struggled for a while. I blew up a handful or more than a handful of counts while I was adapting to Forex from equities. And part of the reason for that was I noticed I expected to take what I was doing in equities and just apply it to Forex and have it work the same, and it absolutely did not. So the mentality I had to go with is I had to create a whole nother trading plan. And I have a whole lessons on my website about creating trading plans because I think it's absolutely vital. Um, if I'm looking from the equity side or the metal side, I use trade ideas, which we have
Mhm.
the ability to take a look at and show the different ETFs based off what's going on in the market. You can see gold underperforming the rest of the market right now. This is all
Yeah.
on a relative basis in which it's showing me the sectors that are the strongest and the weakest at any given time. And with that, I want to use that relative strength. So I want to short stuff that's relatively weak and buy stuff that's relatively strong. And then the other main tool that I use is the commitment of traders report, which I talked about. So if we go to my yen idea, you'll have to flip this because we trade USD JPY as opposed to
Yep.
this is the yen contract. This is something that is now required by law and has been for many, many years that shows if you are a trader over a certain size, you have to report your holdings in the futures contracts, and the futures contracts being a large market. So this particular, the green line right here is showing the position of all of the large speculators.
Mhm.
Everybody, that was what I was talking about, everyone in the world is short the yen and has been short the yen as much as they pretty much ever have been since 2007. That to me is a condition in which I know that they are going to have to flip. Something I do in equities is I look for stocks that are heavily shorted. When those stocks start to move up, I know those shorts are going to have to cover. And that's an equity trading, a swing trading style that I use. So this was the same idea adapted to Forex, where I know that everybody is short the yen or long USD JPY, that if the Bank of Japan starts moving and if I can start to see that in the charts, there is a whole bunch of positions that need to be unwound. And that's what gave me the confidence to hold that winner for an incredibly long period of time. So from there, it just becomes charting and technical analysis in which I use um, anchored VWAP.
Mhm.
Brian Shannon, he's a close friend of mine. We've talked a lot about the anchored VWAP tools that he uses and basic pullbacks, right? So we had this initial push down that happened in the end overnight, a simple Fibonacci retracement
Yep.
looking for this, the regular zone, that kind of 38 and then 61, that golden zone, I think they call it, for Fibonacci retracement.
Hmm.
As it came up in that zone, I'm either looking at the 4 hour or the 1 hour chart. The idea was that if we held this area right here, I want to short and with a stop just over that high. So I'm risking, I believe in that case, I was risking less than $1,000 for that $10,000 profit. Again, this to me is a little bit, this is, call it luck or call it just, being able to
Definitely
hold on the
not
right
more
side.
normal
But
price action for
no,
something for currency to go over 1.5% in a session.
yeah.
It's not normal. So you caught a very nice move.
Yes. No,
Very
I
nice.
expected that hole that I was into. I was
Yeah.
fully saying, okay, I'm going to take a good trade after a good trade, and maybe it's going to take me a couple weeks or even months to kind of dig out of it. But, pleasantly surprised when it didn't. And then the trade that I'm in right now on the yen is we had after that move, I covered somewhere in this area here. As we had that move back up, I have an anchored VWAP marked. So this basically, for those who don't know what anchored VWAP is, it's a moving average that incorporates volume as well, and you choose the point in which to anchor it. And
Mhm.
there was two right here, and one was from this major high right here, and the next one was from this major high right here. And this is just showing me that the average market participant in this, if you think about if you dollar cost averaged into something, this would be your price. So the average market participant from this point, this major high that happened overnight on the yen, and then this high that happened a couple days ago on the yen, that was sitting around in this zone right here. So when
Mhm.
we reversed off that level, I took a little bit of short. My initial stop was kind of up in this area, and for this trade, I'm just going to see if we can kind of threaten this low and then take this low. I believe there's more of this unwind to take place. Now, that commitment of traders report comes out every Sunday. So
Mhm.
part of my work on the weekend is I will review that and I will say, I will know, did anyone cover? Because if this commitment trader report we see that a lot of these shorts covered, then I think it's time to move on from this trade and look at the next one. I'm looking at the franc. I'm looking at Bitcoin right now as well.
Yep.
But if nobody covered, then I want to try to hold this position. And this is where trade rounds might start to occur. If we start to get little bounces and bear flags and ranges for me to play off of, I may take a smaller position short and just look to kind of scalp that. And scalping for me is holding for a couple hours and trying to take a trade out around this position while I hold this core position to see if this is something that's going to reverse on a daily chart or even longer, back into some support levels on the daily chart. So that's kind of what I'm looking at is the commitment traders report gives me which trades are crowded, and I'm looking for the other side of that crowded trade, and then I'm using anchored VWAP pretty much primarily, and then some Fibonacci's to try to time my entry into those crowded trades. Again, waiting for that moment where everybody needs to exit the trade, and I'm the one holding that while they're exiting. The same idea for the stock traders is a short squeeze. Think of GameStop.
Hmm.
Everybody was short GameStop. All it took was some catalyst to get it moving, and then you had this massive pop. And if you were long GameStop, you were able to make a substantial trade there. So that's the
Yep.
idea.
Amazing. Any advice for anybody that is currently struggling to pass? They're in a bit of a boom and bust stage, and they're about to go and get their new challenge because they want to get back into the game and they want to to see some of the profits that a lot of they see a lot of people on Twitter and a lot of people on the internet make, including yourself. You've had some nice profits off these accounts, nearly 25,000. So it's quite a big amount of profits that you've been able to withdraw from all of this.
I will say that those results won't be typical. I don't expect that to occur all the time. I'm not pushing for that because I think the more you push for gains, the more you open yourself up to losses. If you're watching these people on Twitter, just know that they're only posting their best things. That's why I was totally open to talk about all the accounts I blew up to get here. So understand that. And then the other thing that I think is very, very important is that you have a plan. And I think that that's where everyone, and I just don't mean you have a plan of, oh, I'm going to buy here, I'm going to sell here, is that you have a plan that says something like, I am going to enter a trade when these things occur, and I'm going to exit a trade when these things occur. And this is the risk I'm willing to take. And all of that has to be written down. I mentored a trader once who was ex-military.
Yep.
And when I talked to him about this, he said, "Oh, our drill sergeant always used to yell at us and say, you don't get smarter when the bullets start flying." And I think that's a great analogy for trading is that when you sit down at your desk and the P&L is flashing up and down, you're not a very smart person right there. That's why when we exit the trades, we always know what we did wrong. But when the trade is actually occurring in the moment, we just lose ourselves. So have a plan and then understand that most of the things you see on Twitter are just, people's best moments.
Perfect. So thank you very much for everybody for watching this video, and I hope you've taken something out of the conversation I had with Michael. Michael, thank you very much for spending some time with me to give a little bit of your 2 cents and to show everybody your process and your journey as well, and that it's not all sunflowers and daisies and sunlight. It is also
I
quite
wish.
difficult. And
Yeah.
there you go. Thank you very much, and best of luck in the account. Okay.
Thank you very much. Hope to be back on soon.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.